But I think
In
Rajiv
fact,
Thakkar is also joining us on the
that's
show
correct.
right now.
Rajiv Thakkar, a very balanced voice in the market, Chief Investment Officer at Parag Parikh Mutual Fund is here. So, you've seen the action so far. Rajiv, first of all, thank you so much for joining us. Now, we were just discussing the analogy of market, a company which has really outperformed on most parameters so far and landed up over-promising and, very broad commentary on that terms. Even 293, the math suggests that they will form government, but the street is unhappy. How are you analyzing the details so far?
Well, a caveat first, I'm not a political analyst, or I don't even track politics that closely except when there are major elections around. So, as a person who's from the financial markets, if I look at what has happened, if you exclude yesterday and today, broadly we are where we were before the exit polls came in and today's leads that we are seeing. In terms of markets, again, we are close to all-time highs. Okay, we may not be at the exact peak, but broadly, returns have been quite good. And if we step back, really, what does the election outcome mean for the markets? So, barring the pre-election and post-election for a week, 10 days, people will move on. Now, the next discussion will be who gets what ministry. After that, discussion will move on to what will be there in the forthcoming budget. But really, the election outcome does not affect your crude oil prices. It does not affect your auto demand. It does not affect your US tech demand. The pharma companies will be focusing more on US FDA inspections rather than the outcome today. So, doesn't matter really. Life moves on. And as you said, the government more or less, it seems, will be the same with a smaller majority, and it's likely to be a coalition government rather than one single party having a full majority and calling all the shots.
Right. But Rajiv, at the same time, don't you think markets' concern on this part is legitimate, that the pace of reforms could actually slow down a bit? Some of them in the power side, some of the defense kind of work. Yes, it may foolhardy to assume that everything would be reverse of the previous governments, but if the shape and construction of the government actually changes, then probably the reform process will take a back seat, or at least people read at it, or not quite.
So broadly, we have been following the same economic policy for the last 30 years. Now, people with political leanings will tend to disagree with this statement of mine. But broadly, since the economic liberalization started in the 90s, we have been broadly encouraging economic activity rather than looking at a license Raj kind of environment. Now, today, let's look at the policies. You mentioned, let's say, power and defense, for example. Now, in defense, we are encouraging domestic manufacturing. Now, which party is opposing that? I don't see anyone opposing domestic manufacturing of defense or power. People encourage lower prices for the consumer at the end of it, but otherwise, everyone is encouraging fiscal discipline, or everyone wants increased share of renewables and things like that. So I don't think anything materially changes from that perspective. So the only area where these things have much of an impact is where if people are dependent on a particular state infrastructure projects, and then they depend on the party in power focusing on one sector versus the other, or some policy driven areas or companies may get affected, but otherwise I don't see so much of a change.
There is something called a policy premium, and that policy premium is responsible for the aggregate P multiple. For example, how good you feel, where do you see the visibility. 10 years, India has enjoyed a premium to other emerging markets because of policy stability, because of government stability. There was a time when between 2010 and 2015, every 2 or 3 years, we used to have what could be called as policy uncertainty, political uncertainty, and the premium never expanded. I hope we are not headed there, but that is a logical risk which, if the mandate is weak, that is a logical risk for the markets.
So Nikunj, you have been there long enough to have seen all sorts of market regimes, bull markets and bear markets, uh, big majority governments, coalition governments, minority governments. So uh, the first reaction may not be the way things pan out for the next even 6 months or 1 year or 5 years. So again, 2004 was a very, very surprising outcome where uh, you got a uh, hung parliament kind of situation, and a minority government came in with left party support. Markets were on lower circuit at that time, and then 2004 to 2007 was one of the biggest bull runs we have ever seen. In fact, some report was out there where a very, very tiny party having its prime minister saw the best stock market returns in their tenure. So I think we'll come back to what really matters. The reason why I think, and you put the point that India has traded at a premium to other markets for a while, I think that is the bigger cause of concern for me rather than the outcome today. Uh, Valuations have not been supportive for a while now, and uh, really to make good returns in the future, you need start good valuations upfront, which have not been there.
So what would you do if you're sitting on cash? What should one do? I mean, one is the SIP investor, where in long term we will look back and say, okay, this was a passing moment. I've seen 2003 circuit down. I've seen 2009 circuit up. In both the times, the excesses in 1 year, they got checked. So what should one do who's invested and is now worried about what happens to policy related stocks in the short term?
Policy related stocks are always very, very risky. If you are dependent on one big change coming, then that is a very, very big risk. If it is something which is more generally to do with economic policy or conditions in the country, I think things should be fine. As I mentioned, it's not that we will not encourage domestic uh, defense manufacturing after the outcome. That will continue. I don't see any of the basic policies like production linked incentives or make in India or any of that to change. It is just that if you are very, very keen on one particular new thing coming in, then obviously that risk remains. But otherwise, broadly, investors should do fine sticking with their financial plan and asset allocations. I would not advise being overweight equity at this point in time, because valuations have been a concern irrespective of the election outcome.
What happens to the other end of the market, which could be an obvious beneficiary? I'm trying to put the market psychology here. There is rural stress that needs to be addressed. Post-COVID, it's been a K-shaped recovery. The rich have got richer, the poor have lost their purchasing power. Do you see a revival in that end of the market? Because markets would like to preempt what's coming next. Could this be the decisive turn now?
I'm not very sure on how this thing will play out. So one among the beneficiaries for let's say rural demand, you could see things like maybe two-wheeler demand or something coming back. But otherwise, the uh, complaints that one hears from the FMCG kind of companies saying rural demand is not there and all that, I think it's a different kind of demand. So firstly, we have seen these newer brands coming in. We have seen direct-to-consumer plays coming in. We have seen the increased popularity of things like gaming apps. We have seen increased data consumption, OTT consumption. So I think it's a different form of consumption. I don't think just because of this election outcome, you'll see big reversal in fortunes in sectors. And again, coming to FMCG kind of names, the starting valuations are still not attractive enough. So they are very, very expensive despite the time and price correction we have seen in some of them. So I would not make any significant changes to the investment approach.
Today we may look at the screen, and when markets fall, irrespective of the levels they are in, you'll always say, oh my God, the world has turned. But if you simply take out Monday, let's take out what we saw yesterday in terms of the Monday. And we have just gone back to Friday levels. And Ajay, I think that for me is the most important point here is that between Friday and today, market has eroded Monday. That's
Right.
1 day of gain. We gained what, 2,200 points yesterday? How much are we down? We added 700 points. 6-day change after today's brutal fall is about 3%. And yesterday's gain was 700 points, right?
That's correct.
From
On the
700
Nifty.
points, what have you done? You've knocked off
90% of the gains gone.
all the gains are gone. I mean, more than 1%. So actually, you've knocked off Friday and Monday both. And this is the biggest intraday fall. Now it's getting what could be called as the scary territory. Not scary, but now it's getting into what really could be called as uncomfortable territory. Markets were betting on a verdict which has not come out true, and that is the reason why if you see that right now there seems to be an unwinding. Interestingly, it would be to see that what FIs do now. They came back yesterday. Will they be coming back today? They are net long, they are net short. And what are they likely to do both in terms of a mood and also in terms of an approach? I think that would be the differentiating factor.
In fact, even DIIs for that matter. Rajiv, the DII money is actually retail money. Retail money kind of really loved Mr. Modi policy so far, this, that, and their entire SIP number nudging the 20,000 crore mark. Is there any risk to it? Was it only changing performance in the market? If market halts, that money is also at risk?
Real money loves trailing returns rather than a particular political party. So as long as trailing 1 year, 3 year, 5 year returns look good, money will keep coming in, and a lot of effort has been put by the mutual fund industry and the regulators and all to encourage the regular saving habit. I think that will continue. I don't see that being at risk.
Grace. Rajiv, thank you very much for giving time this afternoon. Very, very interesting afternoon. Everything has been reversed. 22,400 is also lost, 900 point fall.